Welcome back to the channel. I hope you're having a fantastic day wherever you are around this beautiful planet of ours. The Gold Coast, stunning this morning. Got out there, got some sun, got a ton of caffeine. So let's dive straight in to the charts before the anxiety waves kick in from too much caffeine. Guys, today's video is massive. End of the week, it is the closing bars for the US markets and for the Bitcoin CME chart as well. That's going to be a new one that we'll have a quick look at today. But this is getting very serious and exciting as we head towards the retest of the June lows. Remember, this is what we've been waiting for and looking out for on the charts to let us know about some strength and weakness. And my main view overall has been that we are getting very close to the end of this bear market. Now, of course, it's going to take some time to realize if that was in fact the end of the bear market. But not to worry, if you watched yesterday's video on the channel, we have a very realistic plan to buy Bitcoin at the bottom. So go and check that video out after this one. I'll leave a link to it at the end of the video. Stay tuned for this one. And if you are a TIA member, don't miss Monday morning's live stream. If you want to join our TIA members, link is in the top of the video description. All right, as we dive into the video, make sure you've hit that like button and subscribe to the channel. Guys, the end of the week has come in. We saw the breakdown of the S&P, of course, the biggest market in the world, which essentially dictates what's going on out there in all of the other markets, including cryptocurrency. But we're just seeing, again, some slight deviations between the major markets in the world and Bitcoin. So I'll get to the Bitcoin chart in just a moment. That, to me, is potentially spelling some strength in the short term for BTC. But I'll just go through the analysis first and then give you my opinions and thoughts on how I'm playing the market at the end of the video. So let's get through this part here. Now, we saw the breakdown on the 15th of September for the S&P 500. And at that point, we were expecting a almost inevitable retest of this lower level at 3,700 and then down to this low at 3,600. Now, remember, the entire time here, over 3 months, we've been saying that this is potentially the low and the base is forming, while the majority of the market is calling for, firstly, a crash, a mega crash, a recession, and then a depression. So the terminology is getting far stronger out there. And yes, we're seeing some downside, but this is no different to what it was 3 months ago. Keep that in mind as well, okay? So we've seen one signal here of the upside overbalancing any other move to the downside. So that is one big check on the bulls flipping the bears. Remember, this is the macro time frame here that we are looking at when it comes to these bigger signals. That is going to take more time to play out. But at least we got one check mark here, regardless of if the market does break down. So the notes I've got here for next week after such a low close on the markets this week is support will most likely break next week, but I don't think it'll be anything dramatic. So if we go up to a weekly time frame, as we just saw the weekly close here, our macro support 3,500 points, and then we have the previous tops in 2020, so January and February before the C19 crash. We had the higher bottoms forming in September of 2020 after the market had a V-shaped recovery when everyone thought the world was going to come to an end at that point because of C19. And we're still above those prices now. So we had those higher lows here, again around 3,200 points. So just to move some of this noise out of the way here, macro support, 3,500. It has been on the chart since December, January of this year. Remember, this is the macro support here. And if we've got any wicks down to the previous lows in September, maybe a close or two on the weekly chart underneath this level and then a reversal, another fantastic signal. We're just preparing in advance. So I'll talk a little bit more about that at the end of the video, but essentially these are the major support levels that we are watching. Remember, macro timeframes will cause macro moves, not the short-term stuff. All right, so we're pretty much on track with what we have been expecting. 3,600 points, 3,700 was tested and sliced through, so 3,600 it is. Next week, that is the level, 3,500 if we can hold that and then hopefully bounce back above. Shorts were triggered, down she goes. That was for the S&P 500. Now, on the daily quickly, as this will come into effect for the NASDAQ as well, we were looking for our GAN seasonal dates, September 23rd, December, June, March. Now, last year, again, seasonal dates, if they're unfamiliar to you, don't worry, we talk a lot about them on the channel. They can produce turns in the market. It doesn't have to be anything majorly significant, but sometimes they really do work quite well, like we saw in 2020. Around those exact dates, and these are pretty much the same every year, around those dates, you get significant turns. You can get significant turns. 2020, they worked out really well. March, around the 20th, we had the major turn in the market. Then September, we had a very significant turn in the market. December came in as well. We had another turn in the peaks of the market as well. It was the final low before that top, and then the market crashed from that point. So what we're looking for now is a potential turn probably within the next week to 4 weeks, because there's some other dates we're looking for in October for the end of a market cycle. So end of the bear market. I'm saying that on record. Yes, I've been waiting for a pretty big time to come into the markets. Sometime around quarter 4, late quarter 3, we saw a low so far in quarter 2, and now the prices are back to that level as well. Regardless of that, we don't need to be right on that. We just need to be having a plan to enter the market. That's the main thing here, because we want to make money. All right, so let's look out for that within the next 1 to 4 weeks, as this year, those seasonal dates have been coming in a little bit later than expected. So we can see the 28th, the 21st was the March date here, and we got a peak on the 28th. And then we went into June. We had a low around that period as well, the 21st, but then we had the higher lows form and the market took off from that point. So in 2022, they're slightly later, but they still seem to be working quite well. All right, so let's move on to the NASDAQ, and it's a similar pattern here. We haven't broken out of the bear market downtrend. We've had one of the lowest weekly closes so far, and it's underneath the 50% level. So the NASDAQ is weaker than the S&P at this stage. The next levels down that we're looking for, if we get a slight break here, are 10,600. And then my danger level, if it breaks under this point, 8,900 points, that's the level that I'll be quite concerned with if I was holding tech stocks and waiting for another big boom up. On the daily time frame from the NASDAQ, it did break through 50% and close underneath the 50% for the week. So the next support level that we're waiting for is 11,000 points. Now, I think this level will be tested over the next week to 3 or 4 weeks, so probably within the next month from this point. And as I just pointed out on the more macro scale, about 10,600, and that lines up with our extension tool here, so our major range that we're looking to the downside. It also lines up with previous lows in September of 2020. Remember, also on the S&P, there's some significant lows back here, so it's a critical level. And for the NASDAQ, it's actually lower than the S&P. So this is looking weaker. Yes, there can be bigger moves later down the track, years to come. But at the moment, this is still looking weaker, so it wouldn't be something that I would be getting into just yet. Obviously, that's my opinion. You guys do what you want with it. But the tech sector is obviously much weaker, and I would be not keen on this. But for Bitcoin and ETH, slightly different story. You can see over the last several days, we've been holding the line here at about 18,500 to 19,000. Now, short term, I can see some sort of move up to around 20,500. But that doesn't mean that I think the end of the bear market is here. I still think, based on what we can see here, that we should see some sort of downside test to around that $17,500 level. We're just not seeing that significant bounce yet. It can change, of course, but for now, the market is really getting trapped between 18 and 19,500, which is to the underside of all the previous support zones. So what needs to happen for the short-term bullishness is for the market to reclaim 20.5 and then come back up to test those next levels. This has been the Wyckoff bullish flip, which has been remained here on the chart since that bar came in. That was basically the day that the market told us. So it's the data from the charts. The market told us that this market is weak. It broke down all of the previous support levels on higher volume than usual, on a big range down, on a low close. So the sellers, the smart money is telling you it's not time yet. And that obviously proved true for, we could say, the last month and a half. So watch out for those points there. I'll be quite cautious in the market until the top of that particular bar can break. That's my Wyckoff bullish flip in the micro time frame. So I need to see that first stair step taken out and closed above. So I think it's a trap unless this is broken. So watch all the closes that come in next week. And then 23.2. And of course, if we can get there and start this stair-stepping trend out of the doldrums, then this is my next major Wyckoff bullish flip, 26,900. As I say, the same signal happened here back in the breakdown of June. Now for a chart that we haven't looked at before on the channel, but I thought I would throw it in here as well, as the trend has just turned down here. So this is the BTC 1 exclamation mark, which is basically the CME futures contract for Bitcoin. This is not open on the weekend, so it essentially represents more about what the institutions are doing. So this is the futures contract here. We had the lowest close, which then has triggered our downtrend. You can see the yellow TIA Gann swing indicator here is basically lower tops, lower bottoms, downtrend confirmed, lowest close in this entire bear market so far. It is the lowest close within the last 93 weeks, so nearly 2 years, but there is always light at the end of the tunnel. These trends are getting old. When trends get old, they tend to go quiet and then they flip. If they don't go quiet straight away, they'll flip from bear to bull. The trend is getting on, and people who are taking shorts may still make some money in the short term, provided they have their stops in play and they keep very safe. But when we see a trend get old and get on in itself, it eventually turns. It's like any sort of season. You go from winter into spring to summer to autumn, and the cycle repeats. And that's what's happening right now. Now, these trends can take some time to turn. It is a macro after all. Imagine you getting into the market during the peak of the bull market here. This took approximately 8 to 9 months for the trend to change. You can see the peaks here came in February. Yes, there were slightly higher highs, but it really wasn't that much of a gain in the overall sense of it. And it's a lot of risk to take for a tiny, tiny gain. So you can see one of the last peaks was February, and then you had one in November. So approximately 9 months of not much actual upside for Bitcoin. The same thing has the potential to happen on the downside. After you get a long time down, the downside moves just become less and less until the market flips. So that's something to pay attention to, especially as this market gets old. And this is going to be important to have a look at when we check out the US dollar. Trends are getting very old. Retail is now starting to talk about those trends. That to me is a very, very big signal that we might be coming towards the end of that trend. I'll show you that in just a minute. The main thing here is the critical signals for the next 48 hours. Watch the trend that's turned down, especially on BTC in the weekly chart. And we're very late in the macro trend. So watch anything that comes above 20,500. I think we'll eventually see a little more downside within the next week to a few weeks, of course. ETH is in a similar sort of position here as Bitcoin. We haven't seen too much more pressure to the downside after the 21st of September, which was very close again to the Gann seasonal day of the 23rd. So you need to have some tolerances here. Remember, these dates have been put out there for years. Gann found these. He's from the early 1900s. These things are tried and tested for over 120 years. So give it a little bit of tolerance. It doesn't have to be on the exact date, but you're going to watch something here for at least a turn. And so that's what we've seen so far on the 21st. We're now sitting at the start of the 24th. So we've seen that turn. Market has bounced off those previous support levels. Yes, I was watching this as a breakdown, and to me it's still kind of weak, which is why I think it will eventually sink back into the 1,000 to 1,300. My opinion, of course, based on the data I see here, but we can, in the short term at least, see some sort of move over the weekend as a potential trap, maybe to around that 1,400-ish level, which coincides with the previous support, our previous 50% levels, and come Monday when the stock market's open, maybe we'll see further downside based on what I'm looking at here, Bitcoin CME futures. You can see the market closed lower. It's the lowest close in 93 weeks, if memory serves me correctly. Remember what we're seeing here on the NASDAQ. Again, pretty low close here, almost taking out the June low. Remember again what we're seeing on the S&P, pretty low close, almost as low as the June low. So even though ETH and Bitcoin are slightly stronger than traditional markets, if the traditional markets do drop, then we're probably going to see that happen on ETH and Bitcoin as well, which is why I'm not rushing into ETH. But for BTC, different story, as I've talked about on the channel before. All right, so the last thing I want to look at here is the US dollar. This is getting talked about a lot with retail, especially even bigger crypto news channels here on YouTube and Twitter. They're bringing this up because the retail investor is very much interested in seeing how the US dollar continues to explode to the upside. But the main headlines we're seeing are Euro, Great British Pound collapsing, but they're not paying attention to how long this trend is going. And when trends get on, yes, they can go on longer than we expect them to. That is a known thing in the markets, but the risk increases a lot. Use your knowledge of the previous cycle on Bitcoin, because all markets are made up of humans. Use your knowledge of what has happened in Bitcoin and how long these trends can go on for, but more importantly, what happens at the end of trends when they get long, hot, and way overheated with retail and news headlines. The US dollar has been up for many, many weeks. The time frame is starting to expire here. If we go from the bottom to the top, we're approximately 69, make your jokes in the comments, 69 weeks into this trend. Last time this happened, we had 49 weeks. So basically a year from that low, and we got the trend in the background. This is the green section here, which you can find on the TI Gann swing indicator. 49 weeks, and then we didn't get an absolute collapse. We went from 100 down to approximately 93, and this did nothing for many, many years. That is 2015, early on. The market sank into early 2018, so that's 3 years. We went sideways again and back down. So this thing did nothing from 2015 until it started to take off in 2021. We are following timeframes here on the channel quite a lot, and they do work out very, very well. Pay particular attention to this, as we're probably coming towards the end of one of these cycles. Sure, it can go on for many more weeks, maybe even hangs around at the tops for months or even years. But this trend is getting old. Beware. So my opinion now, after all of that analysis, let's put all this together, what we can look out for in terms of the critical charts for Bitcoin this weekend and leading into next week. I think we got some big stuff happening over the coming weeks. Everyone's talking depression and fear, and markets are still above their June lows. Important to note here. Before I get into that, just a quick shout out to channel sponsor MEXC. They've got their launch pad over on the website. If you're interested in that stuff, definitely do your own research on different tokens over there. Plus, you can trade spot. You can trade futures over there. They have very deep liquidity as well. Stay safe. If you aren't an experienced trader, stick to spot. But of course, MEXC down there and get up to $1,000 of sign-up bonuses using the link in the video description. So back to Bitcoin, my thoughts this week. Bitcoin and ETH have the potential to rise a little here and give us a bit of a fake out. So I'm watching our 50% level, as they tend to work so often. They've been tried and tested over 120 years. So watch the 50% levels from the down range as a potential fake out, and then further downside from that point. As for the NASDAQ and S&P, they've obviously come back a little more, looking to test the June low. If that breaks down, I bet we will see, and that's obvious, we'll see a ton of fear out in the markets. But this trend also is getting quite late. You can see we've got many swings down, and the moves up are getting larger than the previous moves. So this to me is just signals that we're now testing lower sides and potentially moving into a bit more of a consolidation period over the coming months. Stay alert. I think we are getting into some exciting times, but this is probably going to be some of the most testing times, especially for new investors. And if you are interested and to learn more, if you are a new investor, check out the Investor Accelerator. Link is in the top of the video description. We'll catch you there on Monday for our live group call for questions and answers, as well as our analysis. Otherwise, smash up the like, subscribe to the channel. I'll see you guys at the next video. Have a fantastic weekend. Until then, peace out.